following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source of options, wit, and wisdom. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. And it is another fine start to a fine trading week here. And I am joined, as usual, on the old Option Block All-Star panel by a veritable rogues gallery of contributors, starting off with the man from the land of Canadian licensing, none other than Mr. John Grigas from Options Express. Ahoy, or should I say A?
Oi.
Oi. I don't know.
Oi, yeah, or something like that. I don't know. Okay. But I am taking my Canadian licensing exam tomorrow morning. So, Mark, wish me luck, because my nights and weekends have been spent reading, fishing limit sizes and bear hunting seasons and Canadian securities.
That's some scintillating stuff right there.
I'm really looking forward to passing this. And you only need a 60%. So I think I can do this.
Well, let me put you on the spot there. What is the current ratio of the loonie to the dollar?
What's a loonie? That's that bird that goes underwater when you're...
It's that bird that goes...
Yep, yeah. That's
Canadian. Thankfully,
right there.
Thankfully, licensing exams usually have nothing to do with the actual trading world or markets, and much to do with the regulatory minutia behind the scenes. So they would never ask you.
What you need to do is forget everything you know about trading and just concentrate on what they write in the book.
Yep. So. I remember when I first took the CBOE exam, I was amazed that they really didn't want to know anything about options or option strategies, and all pretty much just wanted to make sure you didn't blow out your firm with anything absurd. That was pretty much it. Very, very interesting. And speaking of blowing out your firms with the absurdity, we are also joined here. We are also joined.
Did somebody call my name?
Wow, there he is. It's like the bat signal went off, and he is here. None other than Mark Sebastian from OptionPit.com, also known as the speechwriter extraordinaire, perhaps even the puppet master behind one Mr. Kramer. How you doing, Mark Sebastian?
Yeah, that's what I'm known for. I'm just hearing about a short sale restriction on Penson Worldwide. Just kind of hitting the tape.
That's
here.
Always a good sign.
So I thought I'd throw that out there, but remind us to circle back. I'm doing great. I just I on national television called this rally when we were only up about 12. I called the next 8 points. So I'm feeling pretty good about myself. And, among other reasons that I feel good about myself.
It's just always good to have a healthy personal image and indeed a body image to go with it.
I've been told that mine is not healthy and near narcissism. Is that a bad thing?
That's perhaps the other side of that very, very slippery slope.
Mm-hmm.
I'm looking here. Yeah, I'm looking here at the Penson. I don't see the news hasn't broken on the tape yet. Must have just come across.
I actually took second place in a narcissism run. I beat Ravishing Rick Rude, but I lost to the model Rick Martel, unfortunately.
Don't you come from the small town of Narcissus, Iowa?
Yes. Well, I didn't have a perfume called Narcissism, which was
Narcisse.
Yes, and I didn't have a feud with Jake the Snake Roberts.
All right, and listeners, we should be joined by one of the KYO boys momentarily once they figure out their Skype issues over there. But with that, I believe we shall dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we discuss, surprise, surprise, what is trading, what is moving the old markets. And as Mr. Sabas alluded to earlier, we do have a bit of a rally on our hands today. The market's closing with the S&P up about 19.5 handles or 1.5% to 1416, whopping 1,400 plus. On the old S&Ps, the Dow closed up about 160 to 13,241. NASDAQ up about 55 to 3122, and the good old VIX cash ticking to the downside, down about 3% to 14.35 on the day. So the bulls are out in force yet again, though we'll see what happens if that Penson news is any indication. Perhaps that will be cut short tomorrow.
Right? Well, I don't think Penson's going to make or break the market.
Penson's not going to break the market. I was being a little facetious.
They're such a small time operation.
But what they're very important from an options perspective because they clear pretty much most of the firms in this space.
No, they clear all the discount brokerage firms. That's it. You know, the number of firms that are still clearing Penson is actually really reduced. Not Thinkorswim anymore. Certainly not OX. Certainly not, Zecco. I don't think even Zecco or anything. So it's, there's just a couple of smaller firms.
No, I think there's more than that. I mean, Merrill and Penson are pretty much split up the bulk of the industry these days, with people, and usually there's still some favorable margin reasons to move on over to Penson. John, you guys clear Merrill? What do you guys clear over there?
We self-clear.
So you self-clear. That's right.
Yeah.
They clear Schwab.
We were talking about Penson a couple of weeks ago. I mean, I didn't hear any news out about it, and we thought they'd be going bankrupt here anytime soon. I know 7 quarterly losses or something like that, but
yeah, they managed to cling to life somehow. I mean, a couple of years ago, or about a year and a half ago at the OIC conference, their booth was empty and there was all the dire talk of bankruptcy then. They've managed to claw their way to life still for some reason. So interesting stuff going on over there. And of course, speaking of interesting stuff and snafus, I suppose that's probably
Bats. The only way this could be better is if Bats cleared Penson.
Yes, that would be a good double whammy. But it is fun in and of itself because their snafu managed to embroil the darling of the market. I mean, they only hit a handful of symbols and it happened to include A. So there you go. But yeah, so those of you who were under a rock last week or don't really know what we're talking about, Bats, good old Bats Exchange has been trying to go public for quite a long time. They finally got the deal done. They were going public last week at the price of 16, and they launched their IPO last week. This was on Friday morning, I believe. And of course, they immediately had a pricing issue with their. I mean, if you could have seen my inbox on Friday, it was just a litany of errors and summaries of errors and mea culpas from Bats throughout the day. It was really just an impressive stream. But the thing started going wrong quite quickly, and Bats noticed as soon as they went public, in their matching engine, they had a problem with their symbols A through BF. And a quick look at the symbol chart will tell you what big favorite issue is included in that range of symbols. And I'll give you a hint, it's not Google. So Apple got caught up in this snafu.
It's a stock that I like. Stock I like to short, right?
It's a fruit company, right?
Yes, they make fine produce for all of our
apples.
They sell product to mind slaves.
Well. Keeping in our strong tradition here on the option block of alienating the Apple faithful whenever possible.
Yeah, we should call this the Apple bashing block.
But essentially, it was
the only thing I like that's Apple is apple bottom jeans.
And
boots with the fur.
the weird thing about this was that, exchanges have snafus and issues all the time. The really unique and weird thing about this was an exchange having print issues in its own underlying. So that's never happened before. So that caused a whole bunch of other unrelated issues, including seeing a bunch of crazy 10% down prints in Apple. I believe the size of the trades were pretty nominal, too. It was like 100 shares. But it just moved the stock 10% due to all these erroneous prints going up on BATs. And it was just a disaster. And they finally figured it out around noon. But by that time, they already pretty much had to go in and bust all of their IPO trades. Talk about just a disaster of disasters. So not only did they move the market darling 10% erroneously, but they also created a bunch of trades that had to go out and bust. They had to go out and bust their entire IPO. They wrote it right here. Once the decision was made, the original IPO print was torn down, individual executions were broken for the day, and the notice was submitted to all affected parties that it was withdrawing its initial public offering. I don't know. I've never seen that happen before, at least not to an exchange. Where they had to, that
is not a good thing. Let's just put it that way.
No. And their CEO just pretty much wrote this amazing mea culpa, which is enormously long. I recommend all of our listeners go find it for themselves on bats.com. But it pretty much gets into this whole thing about how their ticker had problems, and that led to Apple. And 2.5 hours later, they finally had narrowed it down, but that was far too long. And they had determined that a material event had eroded investor confidence and made the timely resumption of fair and orderly trading unlikely. So they pulled the IPO, unwound all auction executions. This for an exchange IPO. This is about as bad as it gets. And also, I'd imagine, John, it made your day quite interesting from a customer perspective.
Yeah, we actually didn't have too much interest in this IPO. Usually, the people are calling us way ahead of time. One of the things that we did see was that when it was halted the first time, if you guys recall, you probably saw like the closing bid ask in the fractions of cents. 4.5 cents offered at 4 3/4. I don't know. That's what the quote providers decided to end with or last disseminate. And so we had people putting market orders in to buy 100, 1,000 shares at 4 cents. And obviously we had to cancel those. We had to put messages up on there and please contact Options Express, Trading Halt, and some other information. But it did make for a bevy of phone calls to explain what just happened. And at that time, we really didn't know what the issues were.
It's interesting, too, because this opens up a scenario somewhat analogous to pin risk, in the sense that if you are executed on some of these trades, if you have a low-hanging fruit trade hanging out there, there's a good chance it's going to get busted. But your first initial reaction, I think of a lot of customers out there who get hit on these is, I want to lock this in. I want to collect my profits, sell something else against it, spread against it, sell it out itself. But of course, if you go and do that, when that trade is busted, you're then left with a naked leg that is completely unhedged and usually quite unprofitable.
Yeah, we usually say something like, "You really think it traded down to a nickel?" And on its IPO. So, I mean, those people, I mean, that see that type of fill and then act on it, I don't know. They just got to, I don't know. It's wrong, and they should know it.
Yeah, I'm not so much looking at the opportunists as much as the people maybe who have hanging limit orders out there away from the market and are getting printed at these crazy prices. And that's another good sign too. The crazier the price, the better the chance it's going to get busted. If you're somewhere near the market. But yeah, the closer you are to the market, closer you are to a fair price, maybe the better chance you have of not being busted. But of course, that gets into the whole pin risk debate of whether you hedge and how much you hedge and what you do with that trade. And of course, yeah, if you're one of these guys coming in looking to scoop bats, for example, for a nickel, then you probably know you have a fairly high delta of that trade being busted. But I'm surprised to hear that your people weren't lighting up your tapes over there, John, with this news, given some of the other developments we've seen over there lately, people freaking out about TVIX and things like that. You think this trade or these erroneous trades would have caused a flurry of response from your audience?
Yeah, not too much. I mean, it seems like our audience is primarily focused on social media IPOs this quarter and not on exchanges. And good for us in the sense that this one just blew up in their face. I would say, most of the people that did call up that talked about bats, kind of had the same conversation as we're having here today. Like, wow, I bet you, in the boardroom when they prepared for all contingencies, they didn't think they saw this one coming, and we all kind of had a good laugh about it. But no really any trade related inquiries on this BATS IPO.
I guess we can rule out option block brought to you by bats anytime soon.
Yeah, no kidding.
They deserve it. I mean, come on. I mean, make that bet. You got to sleep in it.
That is pretty low rent. Especially for a firm predicated on technology. And before we close out the exchange news of the week, this is just probably the no-brainer news of the week that, of course, the CBOE and McGraw-Hill are indeed suing the ISE over their announced 10x SBY options contracts that they announced back at the Boca conference a few weeks ago. So, which is essentially, if you do the math there, it is essentially an exact analog of the SPX using SPY. And so no surprise that they are once again going to court those two.
Unbelievable.
The second they announced this, I wanted to just ask them, are you just bored? You want to go back to court again? Are you tired of the other times you sued them over SPX and now you want to get another fresh entry? So apparently they were. And apparently maybe their lawyers weren't using up all their retainers. They wanted to put them back to work, so they came up with this. But anyway, CBOE and ISE going back to court yet again. Fun stuff. What else were you guys watching for the old trading block? What caught your eye aside from the numerous debacles going on in the market over the past few days?
We continue to watch the TVIX trade here. I wanted to put on a trade on Friday, but my broker Tim Navabi talked me out of it, and thankfully he did. It was down another $1 today, but I'm watching the amount. I can pull up, how many positions or accounts that we have holding that stock daily in real time, and it's just amazing to see people just go, let's see what my account's doing. Let me check TVIX. Let me sell TVIX at the market. I mean, it's just people are just liquidating out of that about as quickly as you possibly can. It was down another 20%, I think, today, or 15% at one point. So we actually got more calls on that over the last 2 days than we have bats.
That'd be an interesting metric to have. See how many OX account holders have TVIX in their accounts. Like a running graph of that would be interesting to see, I think.
I was kind of waiting until everyone got out, and then maybe I would take another long position in it, or a long position.
Take another run. It's got to go back up now, right?
But that one, looks like a reverse split or some type of, restructuring is going to have to happen, or just wind it down, cash settlement. I mean, that one's just bleeding.
It's funny.
What a disaster that is, too.
This is after we talked last week that it seemed like the deal was done. They weren't going to issue anymore. Now it seems like that's not the case. They are going to be issuing more, and of course, that contributed to the crushing of TVIX. Talk about, exactly, a disaster on both sides of the fence, a disaster to cause this to begin with, and then, of course, not being able to manage the influx of funds, and then, of course, causing this decoupling from the NAV, and now coming back down the other side by reissuing these. They should have, I think, at least given some insight into what they were planning to do over there to hopefully gently ease this decoupling as opposed to just coming back in on the other side and just crushing it completely. It just seems like poor management all around. Either that or someone is
got to get press and say, hey, we're not going to raise rates. But I mean, look at it today. It's down 18%, 3 cents off its low, closed at 587 or 588. Jeez, it's a bloodbath.
You think if you were managing
that thing is just junk, and anybody who traded that thing, I mean, it's about to reverse split, so. Don't be surprised if you're like, hey, look, TVIX is way up. It's trading into the 60s now. That's a reverse split, folks. Unbelievable.
Done. I'm getting along. And speaking of TVIX, what have you been watching in the general volatility / VIX land, Mr. Sebas?
We're going to have VIX that touches into the 13s, it appears. They're just
getting close there, yeah.
Just getting crushed. With Bernanke coming out this morning, he basically said the VIX is going to stay below 15 until I say it's not, is basically what he said.
Nice to have that set of power, huh?
It is nice to have that kind of power. But, I mean, that's basically what net is of what he kind of is saying. He's saying, hey, this market is going up until I decide it's not. And, he'll inflate his way there. He will do whatever he wants. My issue is – watch oil volatility. I think that's the next thing that could absolutely blow up here.
Mark, you mentioned that on the CNBC today, but we couldn't actually hang up the phone calls we had with the customers to turn around and watch the TV. So maybe you can enlighten us on that. Correlation.
There is oil and S&Ps correlate really well within certain price ranges. When oil up to about 110 and S&Ps are going to track each other really well. One, up they'll just be up and down together. Once oil starts to break that 110 level, its effect on the economy, its effect on as a product that's used by suppliers, its effect basically on everything. People think oil, they think gas in the car. They forget that it's also a major product in plastics, in jet fuel, in basically everything. It's the most widely used resource, I think, out there, aside from maybe dirt. And as oil breaks that 110 level, you better watch what happens to the market. And if our Fed chairman isn't careful, he's gonna overdo it on the dollar, and oil's gonna start really rallying, and gas prices are gonna get into that $5.50, $6 level, and we're gonna have summer 2007 all over again, and that could be potentially really bad. I think what he's doing now is potentially playing with fire, and that's going to be the one thing I'm really watching here.
And I tend to agree, which is why I've moved most of my portfolio into consolidated topsoil futures, and I'm looking forward to that being really the new area of growth for the future.
Well, it's interesting. I bought peat moss futures just the other day.
I own a peat bog in Scotland. Does that count? No. But yes.
No.
No, it does not. But yes, and I think oil is obviously an oil vol of oil is definitely where a lot of people's attention is being focused. I know, of course, CBOE just launched that new product looking at oil vol, so there's a lot of interest in that, and it'll definitely be interesting to see going forward. And I tend to agree too. I've made this point for a long time that oil has, at least it seems like we saw back in the 08-09 crisis. Granted, there were other external factors at work, but it seems like we saw that there is at least a near-term ceiling to oil, where how far it can go, how fast and how high and how far it can go before it really starts to crush everything else. And so that's always been my argument to the diehard oil bulls, that, argue me substantially past 150 for a significant amount of time, and we'll see what happens to the economy. Give me some reasoning how we could survive that for an extended period of time, and we'll see. But I think we saw back in 08-09 that probably is not the case. So at least that's been my opinion, and it sounds like I've lured you to the dark side as well, sir.
That's the one thing I think our fine chairman is missing, is that he can't just jack up this stuff all day, and that's going to be a real problem as the dollar declines more. Unless the only thing that would stop this is if we clean up the budget, then his money printing will have less of an effect. So, that's your really only answer.
Our fine Fed chairman indeed. And looks like we won't be joined by the boys from KYO today. There has been some hiccup over at the KYO offices, so we'll have to make do with the gang of three today. But there still is plenty of time and plenty of hijinks, so let's dive right into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, a portion of the show where we discuss the interesting and/or the unusual options activity that's lighting up the old tape today, and we have a somewhat regular returning here for the old Odd Block. This is Red Hat, ticker symbol RHT. You might know them as the software maker that distributes a lot of Linux, and they have that adorable penguin for their logo. They were indeed the very popular back in the .com boom, as well, as everyone was thinking Linux was going to be the next big OS boom, and so people were piling into Red Hat. I believe that pit on the floor was pretty active as well for a time there. But they're still around, and people are still flocking into the software services area of Linux. And Red Hat has earnings coming up on the 28th, so just in a couple of days from now. And what we saw today going up was a very sizable trade in some front month upside, a front month upside call vertical, which at first glance looks pretty bullish. Then the more you dig behind it, the more it actually appears to be something else entirely. What we saw was someone piling into RHTO. Before we even get into that, this is the name that usually does about 1,900 contracts a day or so. They did about 12,000 today. So a lot of activity leading into the Red Hat earnings coming up later this week. And what we saw, the bulk of that, nearly 8,000 contracts went up in one sizable call vertical in April. We saw 3,848 of the April 55, 57.5 call spreads going up, being purchased for a net of 75 cents. And so when you first look at that, you think, oh, this guy's putting on a bullish spec ahead of the earnings announcement. But then you dig into the numbers a little bit more and you see that it was done tied to stock, with about 50,000 shares of Red Hat going up at 52.70 around the same time. I don't have the net delta on that spread in front of me, but it looks like that's around delta neutral. So then we have a very different scenario where we have someone coming in, getting long vol, long that upside call wing ahead of earnings, and of course short stock, which then immediately looks to someone actually looking for a downturn here in Red Hat going into the near term. And what we have is the stock's got to pull back quite a bit for that position to start breaking even, but still nonetheless an interesting spread, a little bit more nuanced than perhaps what we usually see, people flocking in with size in the upside ahead of earnings, in particular, let's say name X, even in for any size. I don't know, you guys watch Red Hat at all, Mark or Mr. G?
Not a lot. It can be an interesting play sometimes, but I'm not a Red Hat. My closest experience with the Red Hat is that my granny was a Red Hat lady.
That's a club, isn't it? A club for
it's a
older ladies,
club.
Let's just say.
Yep. It's a lady. It's a senior ladies club where they do events and fun things like that. It's also rumored to be an organized crime division within the senior ranks.
That I definitely believe. Do they also trade a lot of upside call verticals in that Red Hat lady circle?
They do. So my guess is if the Red Hats are behind it, Red Hat's going higher.
It is amazing that this company has persisted, and it just shows that there still is, even back in the day when Linux was free and they were just packaging it. I mean, it still is free, obviously, but they're packaging it just as this software and services in a box. And everyone thought that model was kind of dubious, and yet they've managed to persist when so many other .com bubble names imploded and went away. So apparently there is some legs to this business model they've carved out for themselves here. I remember spending some time out there in that pit. I didn't trade it, but I knew you had some guys out there who were trading it. I believe it might have been, was that the same pit as Microsoft? I think it might have been. I'm trying to remember. If not, it was very nearby to it, but it's very active back in the day. And that's pretty much all I have here for the abbreviated odd block today. So that's going to give us a lot of time for good old Mr. Grigas to dive into the nuances of OX over in the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX Radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, the portion of the show where Mr. Grigas holds the court and gives us his wit and wisdom from the land of, or should I say, from behind the OX curtain. Mr. Grigas, what is going on in the land of OX, sir?
Well, after we got through the TVIX and some of the BATS commentary this morning, and this was something we saw late last week, and Navabi may have touched on it, but I'm not sure. We saw at one point on late Thursday, early Friday, about 10 to 15% of our calls were on LGF, LineGate, and I'm sure Sebastian's well aware because he had to take his beautiful wife to the movie theater this weekend that a movie called Hunger Games was coming out. Now, a lot of the times we see people make plays on earnings announcements, or we see people do plays on pharmaceutical companies where there'll be an FDA release coming up or an anticipated announcement on some type of trials. I've never quite seen so many retail clients play a move on a line gate film based on a movie release that was supposed to, blow the doors off of the movie weekend. And if you look at what, you guys watch the vols more than I do, so maybe Mark or Sebastian or Longo, you could kind of see what the vols were on Lionsgate last Friday. But there were a lot of people buying up both calls and puts. They weren't really one-sided. I'd say more to the call side. That's just human nature. But people were coming in buying up options on anticipation of a big move based on this movie release. I guess the movie did well. I haven't seen what what the movie grossed over the weekend. I know it did about $20 million at its midnight screening, but if you look at the vol across the board today, everything got crushed. So it was kind of neat to see this type of anticipation on a movie studio to release something, and it wasn't earnings and it wasn't a pharmaceutical company. But did anybody hear what they did over the weekend? It must have not been good, or it must have just been neutral.
Wasn't it in the 60 million range or something like that? I believe I think that's what I heard, which is a respectable number. I'm sure.
I heard it was like 155 or something more? Like that. It was a lot.
That might have been like first day numbers that I saw there or something like that.
Yeah, it was something that was. They did pretty well, but the Hunger Games. I mean, that's just seems kind of silly.
Well, don't talk too much about the movie, because I know Tucson and Kavanaugh are reading the book in their monthly book club.
Well, yeah. I mean, well, that's their book club that George leads.
Yeah, Vol fell off a cliff here after it came out. It went from like front month straddles here in the 80 range down to about 50 now post movie. So a lot of that's amazing to me. That just speaks to the increasing retailification, if you will, of trading and moving into things like movies and how they're going to impact these names. Something like the Hunger Games, which apparently is going to be the next Twilight. So people were just diving in mass. I wonder how many of these people buying this vol going into this were 14-year-old girls. A new audience
Sebastian?
for
no kidding.
We won't let Sebastian touch that.
I was
one.
wondering why Tim Navabi was hanging out at the multiplex all weekend.
Well, I did. I took Longo's advice, and I think Kavanaugh mentioned this a couple weeks ago. And I did go see. I brought my kids and my sister and her 3 kids. We went to saw Lorax over the weekend, and we got a little nervous because the parking lot was just jam packed. And I'm like, oh, we're not gonna get a seat. And I opened the doors, and it's 14-year-old girls, everywhere. So, I figured they're not here to see the Lorax. So, there was a good turnout for it, but it didn't look like it moved LGF. And, the smart people, the market makers, were probably selling that premium all day Thursday and Friday and sitting pretty today.
It got up to a high of about 16.20 or so going into the weekend, and then it just came off right about after the week. It came off almost about $2 roughly from the high going into the weekend, coming out of it. So apparently that number was meh or in line or a little bit under what they expected. I don't know, underwhelming nonetheless, because stock, of course, that could also be just buy the rumor, sell the fact kind of thing, which we see a lot in these names. But yeah, apparently that number didn't. It rallied a bit up today, up about 4.5% today. So they made some of that back today. But still, interesting stuff going on. You're right, that straddle's got crushed. So if you were one of these few, and look at the numbers out here, my God. You're right, it is like an earnings.
A lot of volume.
Yeah,
right?
5,000 ADV in this name, doing nearly 70,000 contracts today.
I think where you're going to see this again is when, the only time I saw this before was in Marvel, is it MRVL?
With Spider-Man.
Yeah, that type of trade, but they have that four-man superhero movie coming.
He got thwacked for.
Yeah, that was gonna be my next question. How did John Carter impact Disney?
Yeah. Well, have you ever? It's funny. Every time I hear the name John Carter, I think of our friend from Trade the Markets, who is probably, if they had marketed him as a movie, they probably would have made a lot more, rather than this.
I'm looking here. Yeah, there's a massive open interest spike, obviously going in starting on like the 19th or so of March in Lionsgate, and just rallying hard. About 3,000. So going into early March, you have open interest of a couple thousand contracts, and then it just rallies up into 3,000, 4,000, 6,000, 8,000, 11,000 now coming in today. So you're talking about a 10x roughly increase in open interest over that couple of weeks going into going into the launch of the Hunger Games. And that makes a lot more sense if you're going to play options on that versus trying to write calls or sell vol or trade downside puts on Disney going into John Carter. I mean, that affected their earnings, but Disney is a much more broadly held and diversified company than Lionsgate. One big movie coming in could definitely have a much more material impact on LGF than it's going to really move the needle for Disney substantially. Granted, John Carter was a pretty spectacular bomb, $250 million. Plus some marketing money and everything else, so that's a lot to swallow. But still,
I mean, did anybody think that was going to be a good movie?
Not in this panel.
I don't. Yeah, it's just
those previews look horrible.
And
look like a Spider-Man without clothes or something.
It's a license from 1915, which unless you're talking, Conan or a few others that are known from that era of like the pulp era of like the 20s and teens and 30s, then I don't know who knows John Carter from Mars. I was a big fan of Howard, stuff like that growing up, and I never even heard of John Carter from Mars.
You say Howard the Duck? You love
Yes,
Howard.
I love Howard the Duck. Yes. Now, of course, Robert E. Howard, the creator of Conan and many other great pulp names back in like the 20s and 30s, before he blew his brains out from manic depression. Quite a happy fellow. But yeah, I've never heard of John Carter. So I was watching these thinking this was an original IP for a long time and having no idea what the heck it was about and what the trailers were about. And apparently internally at Disney, they had decided that the word Mars is essentially just a recipe for disaster because every movie with the word Mars in it for the last decade has tanked.
Well, that's because they wrote Mars has moms and things like that. But they could have come up with something other than just John Carter. When I hear a movie called John Carter, I'm thinking something along the lines of like a boxer or a football coach or a mentally disabled person that achieves something that nobody believed in.
An inspirational, uplifting story.
Like Rudy?
He rises from his wheelchair to win the Super Bowl, something along those lines.
Exactly. That's what I think when I hear John Carter.
Or he rises from the ranks of the mentally challenged to run an options mentoring website and
yes, exactly.
Very highly inspirational story right there, Mark. I have to say, you do inspire me every day.
Well, thank you, Mark. I appreciate that.
With that in mind, interesting stuff going on. That might be interesting to watch. Maybe like some charts or numbers coming out of OX of like massive spikes of open interest, or something like TVIX where people are opening and closing positions. How many customers have still have positions in that going in? Something like that might be interesting for our listeners to glean some of that insight into what's going on behind the curtain over there, sir. So, Mr. G, make that happen, please.
Sure, no problem. Done.
That's interesting stuff.
Cost me my job, but whatever.
Yeah, exactly. I mean, yeah, we don't.
Good radio.
Let's identify the customers by names too. That might be good. So, Tom Smith in Iowa has 500 contracts of TVIX. But yeah, anything else going on behind the curtain of OX, sir?
Well, we the ladies here at OX were all frumpled when they said they ran over to me after Sebastian's CNBC. I don't know. Did we mention that yet? That Sebastian was on CNBC this morning, and Tim and I just hung up on the customers that we were talking to, and we walked over and turned the volume up. And after you got off, everyone was like, the women were like, "Oh, it's do you know him?" And I'm like, "Ladies, he's happily married." So a lot of upset ladies here in the office today. Mark the Sebastian Heartbreaker, doing his normal duty.
All the eight ladies over at OX.
What's that?
All the 8 ladies over at OX.
Yeah. Other than that, we had a few phone calls today on this weekend's Phoenix workshop. We actually have a lot of customers that are surprise, retired and trading down in the warm state of Phoenix. Not as warm as Chicago this winter and spring, but definitely warm nonetheless. And they had some questions regarding we're seeing a lot of Schwab people start to go to these now, and one of the benefits that I guess we have over Schwab is Schwab doesn't allow you to do spreads in an IRA, and I guess from
makes no
thinking
sense.
about it, yeah, that's what I thought too. But I think that they're worried. You're saying it makes no sense why Schwab wouldn't allow people to do spreads in an IRA, right?
Mm-hmm.
Yeah, I think they're worried about the early assignment and being short stock in an IRA, or maybe just not understanding a hedged position or spreads. I don't know.
It's probably got to be usually it's my experience it's the latter more than the former on that.
Yeah, so we had a lot of customers that were concerned that, one, I'm an Options Express account holder, you're not going to take spreads away from my IRA, and two, I'm a Schwab customer. I'm opening up an Options Express account, moving my IRA over so I can trade spreads. Are you going to continue to offer it? And I just want to let everyone know that Options Express, one of the first retail firms, off-floor firms to offer spread trading, and definitely going to keep it in IRAs in the continual future. So.
Are these the same folks who also will allow you maybe to write a covered call in your IRA account but not sell a put? Do they have that genius level of account approval over there as well?
I mean, I'm not sure. I know I was turned down for options trading at Schwab on my Schwab account, so I'm going to go with yes.
Well, there's different reasons than that.
Yeah.
They've been looking at you shorting Apple every 2 minutes there and saying, we can't let this guy continue. That was a charitable move on their part.
Yeah, I know. They're actually probably made my account larger by not letting me trade options over there. So.
Well, thank you for that, Mr. Grigas. Interesting insights, as usual, over there into the OX customers, trading size around the Hunger Games. Apparently a lot of 14-year-old girls in the OX customer base. Very interesting indeed.
Mm-hmm. Yeah, don't you know, in between watching Big Time Rush, the 12-year-old tweens are always buying bullish call spreads on Lionsgate.
That's how it works.
It was interesting. Yeah, my babysitter this weekend said the same thing. She goes, "Oh, I bought a Lionsgate bull call spread." I was like, "Oh, really?"
I legged into an iron condor on LGF heading into.
She was telling me she bought the April 14, 16 1x2, and I was like, "Oh wow, good for you." So got a credit. She was really excited.
Savvy babysitters all over the place these days. OX has really discovered a new and potent and quite potentially illegal customer category. So all right.
Around the block.
All right, that traffic means it's time once again for Around the Block, the portion of the show where we dive into what's coming up, what's catching our eye, what's on our trading screens for the next few sessions. We're going to kick things off with the master of all things Canadian regulatory, none other than Mr. John Grigas from Options Express. And Mr. Grigas, what is on your own personal screen for the next few sessions, aside from, obviously, the Hunger Games?
The Hunger Games Part 2, and now that Sebastian made me aware of the correlations between the S&P and the WTI, I think I'm going to be paying a closer eye to that crude oil and the inventory numbers that we have at 9:30 on Wednesday. A lot of people have been talking about how in 2007, the crude and the gasoline prices were such a shock, and people drastically cut back on their driving and the use of the distillates. I'm not seeing that sentiment here. I mean, you don't see every news article on the news, 10 o'clock news, saying, "Oh, these gas prices are horrible and I'm going to stop driving." It doesn't seem to be much of an impact. Some of the stories out there that I've been reading kind of agreeing with that. They're kind of saying that, people are used to the $4 gas. I know that Sebastian said 110 is that level, but maybe it's slightly higher. Maybe it was 110 in 07 and people got a little bit of tolerance here, but I know it does reach a level that eventually they pull back and it does affect the economy. But you know what I mean? I'm not. Maybe it's because it's not summer driving season yet and we haven't switched over. But I think maybe it's now $5 gas or something that you'll start seeing the pressure come into the.
I agree. I agree with you 100%. I think once we break $5 in gasoline prices, you're going to see things really grind to a halt.
Yeah, you're still seeing people out there for whatever reason picking up SUVs again, picking up larger cars. You're not seeing
they're everywhere. Yeah, go to a we all have kids. Go to any family weekend thing or something like that. There isn't one. There's no 25-mile MPG car in that parking lot or up. I mean, it's just their SUVs are everywhere. Yeah,
when we bought our car 3 years ago and we had our little guy, I looked at big SUVs first, and they were falling over themselves. This is in 08, in the teeth of the madness. They're falling over themselves to make deals for the SUVs, but I wanted a smaller, more fuel-efficient car. They laughed. They said, no, these are going above sticker, because everyone was fighting to get those instead. And I don't think we're in that same scenario again right now, where people are fighting to get the 30-plus mile-an-hour gallon little smaller cars.
There's plenty of supply on both ends now is the thing. There's actually less supply of really the kind of the bigger SUVs. You've got GM that's got those great that great line, the Traverse, the Acadia, and the Enclave, and then of course
the Equinox. Yeah, I mean that's
and then the Equinox is kind of the small one.
Oh yeah.
Right. Then they've got the Tahoe, Yukon, Escalade that they offer, but there aren't that many other like really really kind of big SUVs that are out there that fit into that. I mean, that's just the way it is.
Yeah, I use my own barometer here. We live downtown, and in our garage downtown, which you think would be festooned with small city cars, there are still Hummers and Hummer equivalents and all sorts of massive monstrosities.
Range Rovers,
Land Rovers, Escalades. I don't know how they're parking these in an indoor structure like this without knocking the building down.
I just had to park my SUV in a indoor structure, and there was only one area where it got kind of tight, and that was because an SUV was parked one spot and a minivan was parked right at the very corner.
There you go.
So I had to squeak through there. But aside from that, it was actually pretty easy.
You must have been in my building.
I was at Trader Self Park, yeah.
Oh, same thing. a lot of traders driving the minivan to work these days, apparently.
No, this one looked like it was like
stolen.
This is one of those minivans that was from like 15 years ago that used to cart around a bunch of workers or something like that.
All right, and Mr. Sebastian, what is, in addition to oil and all the vagaries thereof, what else are you watching on your own personal trading screen for the next couple of sessions?
I just put on a big trade in VXX. I think that the VIX futures are continuing to have some problems. That we got a decent economic week, but for the most part, pretty slow. I think we're going to be slow until we get into, in terms of anything that can force the market to really make a decision away from grinding up, at least until corporate earnings, which is about 2 weeks away. So short vol right now. That's me.
Yeah, and if earnings doesn't set it off, then we're limping into the summer doldrums without much inertia, and that could carry us for a while with these just vacillating levels right here. Could be having the same conversation in October that we're having now. When are we going to break out of 14.5 in the VIX?
Right, exactly.
All right, thank you for that, Mr. Sebastian. And that is going to do it for this episode of the Option Block. Of course, I want to thank all of my partners in crime for joining me on the show today, starting off with the master of Canadian regulation, none other than Mr. John Grigas from Options Express. John, what are you watching on your screens for the next few sessions?
Yeah, well, I touched on the Phoenix one that we had on the 24th that has passed by. One of the new ones that they just added is actually going to be here in the Chicagoland area. So I did want to mention that ahead of time. April 14th, which is a Saturday, at the Hyatt Lodge at McDonald's campus. That's over there in Oak Brook. We're going to have a free workshop for beginners, for intermediates, for people that just kind of want to come out and meet some of the education department at Options Express. Former market maker Jim Ruzon, a.k.a. Barbecue, leads this hands-on session and will walk you through all the latest features and online trading tools. Plus, Jim will cover a range of trading topics, which include create your own trade plan, incorporate option strategies that can help your portfolio, and so on and so forth. So if you get a chance, sign up for that online or shoot us an email, and we'll get you hooked up.
And let me comment on that. I don't think that there is a educator that works for one of the brokerage houses that is as good as Barbecue is. I mean, the guy was successful as an option trader for market maker his whole career. You are very lucky to, getting to go see him is a lucky treat. You should absolutely come.
Yeah, there, from the man himself. Get out and see it, and it's going to cost you nothing, and you get to see beautiful Oak Brook at the same time.
Maybe get some free McDonald's while you're at it as well.
There you go.
That's right. That's right by my parents' house. If you're going to be there, we can all we'll all go out and we can go fishing in their backyard and we'll grill. It'll be great. Sure, my parents won't mind us crashing their house.
Sounds like a full day plan.
Sounds like a plan.
Sounds great.
All right, sir, go and master your Canadian regulatory stuff. All right, Mr. Sebas, what is coming up in the land of Option Pit that may interest and or intrigue our listening audience?
Well, again, if you haven't checked your email in a couple of days, Mark and I sent you something out with a special offer from Option Pit. My book is available for pre-order now. Go to Amazon.com and search Mark Sebastian, or you can search the Option Traders Hedge Fund. And you can buy my book before it even comes out. It's such a help if people do that. My goal is to try and get on the business bestsellers for the first week for New York Times. It's going to be kind of hard, but with your guys' help and all my listeners' helps, I think that we can really do this. So please go out and pre-order that book.
And yes, listeners, by all means, go that search for Sebastian Mark Sebastian. You will find him there on Amazon. What's the title of the book again?
It's called The Option Traders Hedge Fund.
There you go, listeners. You heard it here first. Go surf and pre-order and propel Mark to the top of the list there. Otherwise,
Thank you, folks.
He will be very unhappy camper on the show for many episodes to come.
Yeah, no kidding. Well, I don't think we ask a lot of our listeners, so it's this would be a nice thing. Just do it for me, folks. Do it for me.
Do it for Mark. There we go. All right. Thank you for that. And, of course, they couldn't make it today, but we'll give a plug to the boys over at KYO as well. Surf on over to knowyouroptionsinc.com, and you will find their 18-minute portfolio review and all sorts of other fun things like Mike and Mike's webinars that you can listen to and have a great fun time with over there. And by all means, for more information and everything we talked about on the show today and much more, surf on over to theoptionsinsider.com or to the Options Insider Radio Network, where you can find our newest show that just launched on the network. You can also find it there in iTunes. And good luck and enjoy that program as well. And that's going to do it for this episode. Of course, we want to thank all of you out there for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.